I think it's very relevant. And you're absolutely right that this has probably been one of the most hated rallies. I thought the rally coming out of 08-09 was pretty hated, but this one's been even more so. And, in a weird way, and if we have enough time, I'd love to talk about everything going on with the Fed at the moment. But in a weird way, the more people that are waiting for the lows to be retested, waiting for the bottom to fall out again, to me, the less likely it is to occur. Not that we won't have volatility. I think you're going to continue to have dueling narratives in this market. On the one hand, you've got continuing efforts to contain the virus, reopening, threat of a second wave. And then on the other hand, you just have unprecedented stimulus from both monetary and fiscal authorities, really globally, that it's been designed to basically stave off financial Armageddon. And we're seeing these narratives play out like daily. I mean, yesterday I woke up and the futures were down, 2.5%, and then we ended up over 1% up on the day. So you're seeing this battle play out daily, and I think it will continue to play out until we get clarity on a vaccine and a cure or both. But ultimately, we're very optimistic because we think, one, you've got the smartest minds in the world trying to solve the problem with coronavirus, and we think ultimately you get there. And then when you do, too, you've got just record stimulus in the economy, especially on the monetary side, which will have side effects. And probably my biggest concern is that you have an arguably over-levered corporate sector that gets even more over-levered, and you have to go through a balance sheet. You have to go through a period where you kind of deleverage that balance sheet. But ultimately, I think we're going to be in a good spot once we get past what we're going through now.
Jeff. Oh, I should say Jeff Karen, shouldn't I, really? Look, come on, Jeff. This market, as we've just said, has had an almighty great rally since March. Every asset on the planet that is worth its salt is being bid within an inch of its life. Every bond that's worth having is being bought into extraordinary nose-bleeding territory. Every equity we think is going to survive has been bought. What on earth have we got the Fed going directly into the corporate bond market for, buying potentially the stocks that have been left behind a little bit, the ones that the market has decided, do you know what, you might not make it in the 21st century in a post-COVID world? Why on earth is the Fed trying to distort the market, a market that is already, in some people's eyes, not yours, Jeff, but in some people's eyes, in bubble territory?
Yeah, no, and absolutely you're right. There are assets I wouldn't touch with a 10-foot pole. And there are overvaluations in parts of the market. And if you play the short side, there are probably going to be some opportunities there. There are parts of the market that are still very undervalued, and that's what we're focused on. Look, why did the Fed do this? They had no choice. I mean, we were facing, and we still are facing, the equivalent of just this economic black hole, this economic desert, as we've called it. And Jerome Powell and the Federal Reserve basically stood up and said, we will buy anything and everything under the sun to prevent financial Armageddon from happening. And man, there are going to be consequences to this, and we can talk a lot about what those will be. But the alternatives, I think, were a lot worse. And the interesting thing is they haven't really bought any bonds yet. That's the funny thing. You know, if you look at, the balance sheet's gone from $4 trillion, I think around 19% of GDP when all this started, to over $7 trillion now. It's almost a third of U.S. GDP. But none of the big bond programs have really been ramped up yet. I mean, you're looking at the primary corporate credit facility. I got all these names, right? Secondary market corporate credit facility, the Main Street lending facility, even the TALF program. If you actually look at the Fed's balance sheet, those even haven't ramped up yet. So it's just been the threat and the belief that they're going to do it that's really driven so much of this. So, I mean, you're at $7 trillion now in terms of the Fed's balance sheet. That could be getting upwards to over 10, maybe 11. I just really don't think that you want to be betting against that. And I know a lot of people are, but I just think that's probably a mistake. I mean, they're going to do whatever it takes. It's the Mario Draghi moment in terms of whatever it takes to get us through this. And ultimately, I think they'll be successful.